All right, ladies and gentlemen, the next session for the day is on a very interesting topic on cybersecurity in financial fraud prevention. And this will be delivered by none other than Mr. Anirban, the head of financial crime compliance for Middle East, North Africa, and India, along with South Asia as well for SWIFT. A very good afternoon, Mr. Anirban, and we look forward to your presentation for the day. Thank you.
Good afternoon, Anil. Thanks for the introduction. So, for the benefit of time, let's start begin. Just help me with one thing. I'll just share my screen and
Mhm.
just confirm if you're able to see my slides.
Sure.
One second. Can you confirm if you can see my screen?
Yes, we can. One second.
I'll just go
Okay,
full
yes,
screen.
we can.
Yeah.
Yeah.
Thank you. Thanks, Anil. Thanks, everyone. Good morning, good afternoon. So, thank you for joining us today. So, as Anil introduced myself, so my name is Anirban. I'm based out of Mumbai. I represent the financial crime compliance portfolio for SWIFT in the region. And definitely, we have a very interesting topic here. So, we are going to talk about the cybersecurity in financial fraud prevention, and we'll try to answer some of these questions that you can see on the screen. And the interest of time, I'll keep try to keep it short and primarily focus on the cross-border payments per se, right? So how fraud landscape is evolving, how the regulators and financial institutions are reacting, what are the impacts of cybercrime, cyber incidents on the financial institutions, how it can be prevented, and through systemic monitoring. Moreover, enhancing on dynamic defenses in the SWIFT ecosystem, and this will be as we go forward we will be talking about that. Now let us address this by one. So the first question is that what types of frauds are highest on the radar for regulators and financial institutions. Now let me share some numbers. So what do you think about how big these frauds are? How big is it a problem, right? So if you look at in totality, the fraud targeting individuals and businesses, both authorized and unauthorized, and that's the category of the frauds that we have, is amounted to about $10.3 billion in 2022 itself. Now, what is impressive about this number is that this number is only on in USD and does not cover any other currency. So then definitely the overall fraud numbers are going to be significantly higher. Now, on top of that, if FBI also estimates that 7% of the fraud cases are actually being reported, rest are not, right? So, as you can understand, the numbers are going to be even significantly higher. Now, if I talk about the trends that we have now, in terms of if I look at some of the past data, let's say the FBI data itself. So in 2017, FBI estimated the amount of fraud involvement was about $1.4 billion, and which kind of increased to $6.9 billion in 2021. So that's 600% increase in 5 years. Sorry, one second. Yeah.
Mr. Anirban,
Now,
I think the
yes,
slides are not moving. I guess
you are able to see the screen or not?
I'm able to see the screen, but I'm able to see only the first slide.
Okay, but I have one second.
Yes. Now I think you'd have to change it manually as you go
Ah,
into the
okay, okay.
presentation,
So because
or
okay,
you can go into the presentation mode so that it would be easier
I
for
was in the
those to.
presentation mode, but help me understand. So I was talking about these numbers, right?
Mhm.
Okay, sorry, I've been then you may have missed this part. So we were talking about the amount of money involved into fraud, right? Now we have been talking about what has been the estimates of FBI and how it has evolved over a period of time. Now, beyond the financial losses posed by the individuals and businesses, the fraud is actually hugely a huge cost for the bank itself and the financial institutions, right? Indeed, if the customer is a victim of the accounts which are being hacked, so they will definitely going to come back to you for recall and recovery. So the amount of loss that the banks actually have, if it is $1, the cost for the bank is going to be $4. So that's an estimate that's been done by Global Newswire. So they estimate that because there will be a lot of litigation cost, recovery cost, you need more, head counts to even address to those problems. I've moved into the next slide. Can you confirm if the slides also moved in or not?
Okay, we are still in the same screen where it says 10.3 billion
Okay.
losses in 2022. Okay, right
So
now,
then I
now
have to
it's
do it
changed.
manually, I think then.
Yes.
Yeah. Okay.
Yeah.
Fine. So let me talk about what are the drivers of the payments fraud pandemic. So that's what we call them, right? And the perspective that I'm going to talk about today is from Swift's perspective in terms of how we see that. Obviously, the views are individual, but that's how, as an organization, that we see that how this is evolving and stuff like that, right? Now, before we dive in into the topic of fraud, let's look at that how the how the industry is evolving with this with the different kind of changes that we see. First, the payment industry is moving in a very rapid pace, in a very rapid pace in the great direction. So payments are actually becoming faster every minute, every day that we're talking about, which include the cross-border payments, and the customer expectation are heightening at the any point of payments, and that is becoming the new norm. But you've surely heard the phrase instant payments means instant fraud, right? So we indeed, as payments are becoming faster, this means that the time window for recall and recover is also going to be significantly reduced. Now, the second driver that we see here is the fraud, which are primarily which are in the new industry players that we have been looking at, right? Now, behind every rise in fraud of individuals and businesses in here is in the rise in the new industry players, such as online player, providers that we have, which can again has benefits definitely, but also create entry points for and vectors for the fraudsters to leverage, right? And then similarly, payments have experienced significant digitization as well, as we have seen in the recent past. And with the pandemic, I think the entire financial industry has have been moving into it. And more payments have been made online through contactless channels or via increasingly simple user interfaces. Now, again, the fraudsters have taken this as an advantage of the new payments and the other digital channels, making new payment methods a significant driver for the rise in the payment fraud. Similarly, and finally, I think this is also to do whether it's related to economic uncertainty or political instability. It is a well-known fact that the times of systemic uncertainty, bad actors become more persistent to chase financial gains and seek to cause disruption, which is indeed a goal in itself. Now let us look at that how the regulators are kind of looking at this. This is nothing new. I think it has been there for last 7 8 years, in particular for Swift. Now, almost every central bank that you can see on the screen or the regulator across the world have issued some kind of warnings to the public about, concerning the rise in fraud, sometime mentioning social engineering, phishing, impersonation techniques. Now, beyond such statements, some regulators have also reached to the stage for proposing regulatory updates on a very frequent basis upon banks and financial institutions or the regulated entities that they have, including by imposing customer refunds or additional mandatory controls for the banks or payment service providers to implement. Now, let me look at what's happening in MENA, right? In particular. Now, likewise, I can see that the global regulators, the regulators in the Middle East as well, including UAE, Saudi Arabia, Qatar, Egypt, Jordan, etc., are also taking this very seriously and have issued guidelines of fraud mitigation controls. Now, what is interesting to note here is that the survey conducted by Deloitte recently, which highlights top three reasons for the rise in frauds in this region, right? Number one is limited understanding about emerging fraud risk. They may be knowing it, but they are not updated. Secondly, the kind of the reliance on static and dated internal controls. That means they have already implemented something, but they are not really looking at on a regular basis, and that's also going to be a problem. And thirdly is the lack of independent monitoring or maybe segregation of duties. Maybe there is there are a lot of shared activities and between the employees, which are going to be which is actually going to be a problem here. Now, since we're talking about the controls and regulations here, it is important that we also talk about what is the customer security program, which is a security framework protocol from Switch, which was introduced in late 2016, right? So I'll just try to briefly mention these three pillars as you can see on the screen. So the first one on the top, which is talks about you. This is focusing on the predictable controls that we're talk that we can talk about, which are primarily to talk about the hardening of the local infrastructure, maybe talking about the passport policies, segregation of duties, firewall policies, etc. Obviously, these are and this will also be are kind of backed up by third-party assessments as well, right? Now, the second pillar, I think it is often neglected that we have seen is, uh, you know, not having a system of really monitoring your outgoing transactions, right? So it needs to be, checked out that the focus on bringing in behavior monitoring on a systemic way, which can be a network-based monitoring mechanism based on your past behavior, and the behavioral pattern we'll talk about as we move forward. And third, but not the least, I think this is also important is sharing of knowledge. So this is what we call the Isaac portal, and this is been provided to all Swift users, and it primarily publishes all the incidents with an in-depth analysis, and the case study of such incidents are being published, right? Now, this gives provides two different perspectives. One, for a bank or financial institutions, it is important that they also understand that what is going on right now. So to keep an pace of the latest trends that we see, what kind of malware is being used, what are the modus operandi that they have, and at the same time also benchmark their existing defense mechanism against actual incidents, right? If they can always assess that, okay, if that has happened to a particular entity, can a same thing if that happens to their entity, that are the defense systems good enough to stop and prevent that from happening. Now, the other question that we had is, what are the the impacts of the customer frauds, right? What are the kind of impacts in case of a fraud, right? So looking at the first point, which is financial loss, the banks themselves can actually be subject of a fraud. For an example, an employee of the bank can receive a phishing email, or maybe can be a subject to other types of social engineering practices, leading them to initiate payments on behalf of the institution. And it can happen in various ways. It can happen from an insider, it can be completely an outsider, or it can be a combination of both. Now, bank employees can be very much be the victims of scams as well. So financial institutions and banks themselves can suffer from financial loss directly. Now, the second one is definitely, as we mentioned briefly, is about the reputation, the recovery cost, right? With every fraud that they have, there is a attached recovery cost that banks needs to, kind of envisage and account for. Third is, I think this is the most important one, is the reputational damage, right? The fraud has also reputational damage that can affect your overall customer experience. So many banks actually implement fraud controls to preserving their trusted relationship with their customer. That's a very important piece. And when an incident happens, the regulator also becomes very active and try to understand that what's happening and what's going wrong about it. So with the regulation will maybe doing an audit to your bank, or trying to see that whether the scrutiny will be launched in terms of understanding if there is a regulation there, how well you are prepared for it, or how well your the bank or the entity is actually following them. uh, Now, the last question that we had is, how can the financial institution detect and prevent payments fraud through behavioral monitoring and analytics? I think it's a quite a critical piece here. So underneath all the apparent differences in the techniques and typologies, different cases of fraud ultimately present a common denominator. What is the denominator? That they are all present in terms of anomalies, right? Now, what do we mean by the payment anomalies? Well, there are various markers of anomalies that can be symptoms of fraud. Either it can be an individual or it can be a combination of both. It may be that the value of the payment is particularly abnormal. I'm talking about the values, which is the first one. For example, your customer may be initiating a payment that can be abnormally high for a certain country corridor, right? So that is, they are not used to sending such high value payments to, say, country X. Now, another example can be if the beneficiary account to which the customer is actually about to send make the payment does not typically receive payments in such high amounts, right? So that is also an anomaly. So another marker of anomaly can be, the second one we're talking about, the abnormal volumes. So for an example, if you are, that your customer has sent 50 payments in a day, whereas you typically may be sending 10 payments a day. So that's definitely a anomaly. So this represents an anomaly that may be worth investigating into, and try to see that, okay, if there are any kind of other precursor markers to that, or not. Next, currencies. Yes, the usage of currencies also can become an anomaly. For an example, if a customer has previously been sending payments in currency A and all of a sudden he is sending currency B, which can itself be anomaly in itself, right? And this may be, and definitely, it does not necessarily mean that this is going to be a fraudulent payment, but there can be some markers. You can put some limits on that as well, that if it exceeds certain amount, then you will receive an alert. That kind of a scenario can be generated, and that's very, very important to monitor the payments in that way. Then you have got unusual corridors, right? That are typically anomaly that banks can watch out for. For an example, if your customer sends a money to a new country all of a sudden, that you have never sent a money to a country, and all of a sudden that is being sent, and that has actually maybe beyond a particular limit as well. So those kind of things are important. Finally, the other anomaly marker is the relationship between the two given accounts. If your customer is about to make a payment to a beneficiary account that it has never sent money before, right? And this might be an unusual, especially if there are other factors combined, such as new account or a new currency is involved. Now, in short, uh, the fraudulent payments can often present anomalies that may be subtle. Hence, this is why the anomaly detection is the core of fraud prevention, right? To extend that, now the next question is arising here is that how the financial institution detect anomalies efficiently without posing unnecessary friction to a actually a legitimate payment, right? Some of the anomalies we touched upon could be very well present in a payment that is actually legitimate, right? But on the other hand, it may be very well a case of fraud. So to make that assessment and make that discretion, the key is detecting anomalies is data, right? We have been hearing about from our fellow speakers here that, okay, data is extremely critical, and we also believe the same. Now, then again, what data that we are talking about? That's also important, right? Well, as financial institutions, we already have a large amount of account level data for, from a bank's perspective. We can have a, flow. We have a institution flow in terms of understanding how the customer is behaving, what kind of payments that they're doing. You typically have a lot of information about the customer account profiles, which can be, leveraged to define, expected traffic patterns that can include an account, but also the history of past transactions. So where we look at maybe past 2 years data, right, in terms of understanding the behavior of that particular customer account, and which can be definitely be helpful to define the expected average value and the volume that they are kind of transacting with. So while the financial institutions have a lot of information on their customers, they don't have much information about their beneficiary accounts because they have not done any KYC on them. It's basically your customer sending maybe payments outside. They can be regular beneficiaries, they might not be, right? But you have got very limited information apart from the name and the address of the customer in that, or which bank that they have holding an account, right? Now, in that scenario, the beneficiary accounts that receive the payments from the customer, and nor do they have any view on what the other customer institution is sending. So primarily you have got view about only one leg, that your customer is sending payment to the other party. But on the Swift network, you have that activity with the other banks as well. So as a payment network, so that is a visibility of overall traffic that we are talking about here, that the financial institution don't have individually. So if I'm bank A, I don't know what whether a bank B is also transacting with that beneficiary or not. Now what we have now started doing is we are trying to leverage this particular data, the network level data, and trying to see that if this can help in leveraging any systemic risk monitoring and not, right? So back to our question on how financial institutions can detect anomalies to prevent fraud. Well, in short, it's only the combination of the institution data together with the network level data or insights that can actually provide a 360 view on what is happening around, right? Now, let me also, talk about little bit on the different kinds of, kind of rules that you can actually build on the on a service called payment controls, which can actually help in this particular direction. So first on the left, as you can see, the new scenario rule, right? So fundamentally, this is to detect any currency or corridor, or you are sending it to a new institution. For each of these rules, you can add some kind of filters. By example, maybe you can say that, okay, message types, because in Swift you've got different categories of messages. There are different message categories for payments, for trade, for other things, right? Then you can also have beneficiary country, or you can also have specific currencies, right? Next is a business calendar, where you can allow, your messages to go in a particular time frame within the maybe the working hours of the bank. You can also create and on top of it, you can also create some exception that wherever there are, public holidays and stuff, like to accommodate a kind of a very smooth operational model in that. Then you also definitely will have a third eye, the threshold based limit that we have, right? So there are three threshold based rules that you can see. The one, you can do it on a single payment, that is individual one payment. You can say, okay, more than 1 million, please stop it. Then you also can have an aggregate value. That means you can say that every hour the aggregate value of the payment should not exceed X amount. And definitely these are to be decided based on your historical data. And also it monitors on the volume side. So you can also say that, okay, if you're sending actually maybe 10 messages an hour, all of a sudden it cannot be 50. So those are the anomalies that we typically will be looking at. Now the risk scoring is also something which we already have, and we are also trying to develop with with the new AI and other stuff. But yes, right now what we have is we are looking at the big level data for risk scoring. So this is a combination of two, three parameters, which is a single corridor, which is a combination of your single payment or aggregate payment or volume, as well as the corridor of the payment. So you also have an option where you can upload the high risk jurisdiction according to the bank's policy, and then a score between 1 and 1000 can be populated, right? Now, on the account monitoring rule side, you can also block payments and alerts based on some forbidden list, right? It can be either being provided by a central agency, but or it can be an internal list as well. So until now, we have been looking at institution level of rules, right? So which are incredibly powerful, and obviously it can detect anomalies at a bank level and when you're monitoring for last 2 years. Now, the institution would be able to look at anonymized account level data as well in the entire Swift network, as I mentioned earlier. So this means that on top of the detecting payments that are not normal or given institution, it will also be able to detect payments that present anomalies in a given account, right? Now, how will Swift be able to, provide these anomalies? The two ways of doing it. One is looking at the duplicate payment. That can be a marker for a fraudulent payment, or maybe erroneous payments. And there can be also new account scenario rules, right, which allows you to detect new beneficiary accounts or new currencies, as I said before. But this is at the beneficiary account level. And finally, obviously, you can also do in a logical way, putting it in a combination and set condition as an and condition that we can put in. So overall, if I look at the future of anomaly, so beyond these existing capabilities, Swift has a dynamic roadmap on this, and not only on this particular solution, but in looking at as a overall, on the Swift network, and continuously evolving based on needs of the community and the users, and ongoing future, which can include Enhancement on the granularity via advanced data insight, of which starts with the launch of account analytics we talked about. We have got greater flexibility in targeted screening, including the introduction of rule combination we talked about, and also leveraging the artificial intelligence, which has been crucial in the risk scoring to stay up to speed with the evolution of the fraudsters modus operandi, and which are planning to render available to additional channels that we have. And we are currently also working on federated data and federated AI or artificial intelligence initiatives to continue, integrating the community data in a way that we can leverage the best in class AI practices in privacy, and preserving the ways, as always. So that's what I thought I'll try to share here, and I'm happy to take any questions if you may have.
Thank you so much, Mr. Anirban, for the detailed presentation. One second, let me just quickly check if we have any questions for the session. Okay, we don't have it as of now. I'll connect with you personally if we receive any questions on your session, Mr. Anirban.
Yeah,
Right.
all right, thank you.
Uh,
It
thank you
has
so
been a
much
pleasure.
for being a part.
Thanks. Bye.
I mean, we are more than glad to be having you for the presentation, Mr. And
Thank you.
I definitely appreciate your patience because you were waiting for quite some time
That's
before we
absolutely
started
fine.
the presentation.
Understandable. All right. Thanks.
Thank you so much, Mr. Have a nice day.
You too. Thanks.